The Kazakh president says that protests are external aggression. So we are now 5 minutes away from the top of the hour, where we do see the FOMC meeting minutes released.
Okay, so we're gonna have to see how this goes here. FOMC minutes within next 4 or 5 minutes here. January 5th. Honestly, it's been a very tough day to trade. Tough because I think I had some execution errors a couple of times, and to be honest, I think I was a bit not focusing very well at certain levels. And anyway, here is what the day looks like so far. I'm actually pretty happy I made it back like this, but it's mostly trading one or two lots, and I have one big loser that was really annoying, an NQ loser here. So let's see how we do here with this news. I'm gonna take it light. If you look at my ratio chart here, we've got really a lot of rotations throughout the day. When it comes to ES and NQ, it's been pretty wild. Look at the open, and then went up, kind of kept flat, and then ES led the way again. The volatility has been on and off, and I think that's something that I've been kind of struggling with here today. So yeah, I mean, look, we're not perfect, and we're all human, and we need to uh, adjust to what the market's doing right now. So I'm going to try to see what I could do here. I've got my coffee ready because I think um, it's been an exhausting day for me. I had a lot of stuff going on with the kids at home as well. So, you know, with all the lockdowns and all that, schools are starting a bit later. So I'm just going to let the squawk here talk, and then I'll see if I can take some trades here. All right.
15th FOMC meeting on their website. We'll provide the link for you momentarily.
All right. So let's see how this does. What the reaction will be with the markets here.
And the FOMC meeting minutes are now available on the feed for you to read through. We'll give you the breakdown. And the Fed minutes in light no longer necessary.
Totally untradeable here.
From the Fed minutes, policymakers began in December to discuss how balance sheet policy might feature in plan to reduce accommodation when warranted. In the Fed minutes, most participants judged conditions for a rate hike could be met relatively soon if the recent pace of labour market improvements continued. Participants also noted that, given the outlooks for the economy, labour market and inflation, that it may become warranted to increase the federal funds rate sooner or at a faster pace than participants had earlier anticipated. Participants remarked that a quicker conclusion of net asset purchases would better position the committee to set policy to address the full range of plausible economic outcomes. Fed minutes says that expectations for timing of the first decline in the balance sheet were diffuse. Some participants also noted that it could be appropriate to begin to reduce the size of the Federal Reserve balance sheet relatively soon after the beginning to raise the federal funds rate. Fed minutes, some participants also remarked that there could be circumstances in which it would be appropriate for the committee to raise the target range for federal funds rate before maximum employment had been fully achieved. Participants remarked that the committee should continue to prepare to adjust the pace of purchases if warranted by changes in the economic outlook. Some participants judged that a less accommodative future stance of policy would likely be warranted and that the committee should convey a strong commitment to address elevated inflation pressures. From the Fed minutes, no decision on policy normalization were made at the December meeting. To repeat, no decision on policy normalization was made at the December meeting. Most agreed that the risks to inflation were weighed to the upside. So just taking a look at the markets through the FOMC minutes here, I did see a bit of whipsawing on the JIGSAW as well as on the S&P 500. So apologies, strength from the JIGSAW there, and we did see some whipsawing on the S&P 500, which is now ticking towards the downside. More from the Fed minutes, all participants remarked that inflation had continued to run notably above 2%, reflecting supply and demand imbalances related to the pandemic and the reopening of the economy. Several participants pointed to the possibility that structural factors that kept inflation low in the previous decade may re-emerge when the effects of the pandemic abate. Policymakers at the December meeting began discussions of the eventual normalization of monetary policy, including approaches for removing accommodation, size, and composition of the balance sheet.
Crazy movements here. Unbelievable. Crazy movements. Wow. Tremendous volatility.
Some participants discussed that the risk that recent elevated levels of inflation, businesses, and increased cost of living adjustments in wage negotiations, as well as early developments that could affect the anchoring of inflation expectations. Some policymakers noted that the balance sheet could potentially shrink faster than last time. Participants generally expected global supply chain bottlenecks to persist well into next year at least. Some policymakers thought that significant balance sheet shrinkage could be appropriate in the normalization process. Some Fed officials said that less accommodative stance may be warranted. A number of participants judged that a substantial improvement in the labour force participation would take longer than previously expected. almost all policymakers thought likely appropriate to start the balance sheet runoff at some point after the first interest rate hike. From the Fed minutes, participants judged that the balance sheet runoff could start sooner after policy. Many participants judged that the appropriate pace of balance sheet runoff would likely be faster than last time. So just keeping an eye on the market, seeing that the EC is extending gains towards the upside, while the S&P 500 is extending declines. Many participants noted that the emergence of the Omicron variant made the economic outlook more uncertain. Several remarked that they did not yet see the new variant as fundamentally altering the path of the US recovery. The futures imply that traders see more than a 70% chance of the Fed raising rates at the March meeting after the FOMC meeting minutes. The futures imply that traders see more than a 70% chance of the Fed raising rates at the March meeting after these FOMC meeting minutes comments. Letting mortgage-backed securities run off faster than treasuries.
Tremendous volatility here. FOMC minutes, 5th of January. Basically, a lot of news. Look at the market just tank here. I mean, it's one thing, but if you go short here at these levels, it could reverse on you 10 points and super volatile. So I'm gonna be cautious because I actually made up a good chunk of my day here with one nice trade, which ended up kind of giving me a good end of day. So I'm gonna keep it tight and not really make too many trades. And if I do, I'm just gonna record them so I mean, normally.
From the Fed minutes, PCEs to drop 2.1% in 2022 and remain through 2024.
So make sure to follow me on my various channels, guys. And I'm going to be coming up with a new detailed structure around evaluations. That should be fun. volatility. Just gonna see. NQ is dropping here. 82, 83s. 82, 83s are back. I'm gonna go long on ES. Let's see if we can get something here on ES. I think we can. Just need to push higher from NQ. Volatility here. There you go. A couple of good trades. Mostly traded Apex, the funded accounts, and one or two trades on my regular broker account there. So, yeah. Decent volatility here. Can't really be wrong with the main direction. It's mainly bearish because every spike up has kind of been run back down. I gotta say, this is really volatile, guys. This is just, I mean, you really have to pick your spots with the tape here. And, you know, look, I mean, one way to do this is 63s are value. If you want to sell, you only want to sell like maybe 73s, okay? And again, the way the market moves up to that area is really important. So 63s have been accepted here. The market definitely looks like it wants to go lower. So you now look, 64s are value. So if you're going to take a trade to the downside here, you're going to have to, you know, you're going to have to either put one in, you know, one order to short in, and then you know, that's why I couldn't cancel my orders today. It's been really one weird thing. I have to maybe restart my platform or something. Yeah, and the volatility doesn't help too. So anyway, it's been pretty volatile and nice. I mean, I was down pretty heavily today and then made some really nice trades after that. So it's 2:23 p.m. right now, and it was the FOMC minutes that came out here. And man, you know, there's a lot of indication around rate hikes for 2022. A lot of volatility is really being pushed into the markets here. Now Nasdaq is under 16,000 again, so you know, this is going to be a very volatile period if we go through this kind of volatility for the first 3 months. January, February, March is generally
interest rate futures are now roughly seeing 80% chance of a Fed rate hike at the March meeting also.
Yeah, like I said, I mean, there's a lot of expectation around, you know, rate hikes and all that for 2022. So normally January, February, March are really nice periods to trade. So that's what I'm gonna focus on first 3 months of the year and really benefit and get the most out of these prop firms. Go get, you know, easy money with the funded accounts that I have, because I'm funded. I have the accounts, so I just have to go get, you know, 2, 3, 4K, whatever a month, and just really focus on that. I think 64s here are really good for Nasdaq. I might look for a long. Let's see. Nah, I don't really like it here. So I'm gonna keep my powder dry here and see if I could. Okay, so we're in to the last 30 minutes of the markets here, January 5th. Here's my overall trades. I have a pretty good number of trades here. Ended up with 1,400 in profit, really making, you know, had a tough start to the day, but the volatility in the afternoon has definitely helped. Now we've got really a market that's really rotating between 15, what is it? 15,800s approximately, yeah, on Nasdaq. And I generally don't trade the last 30 minutes, but I will just wanted to, kind of go over certain things here. Gonna try to keep the videos a bit shorter just to make sure that I don't exceed certain number of minutes. Here's what the market's been looking like right after that 2 p.m. FOMC minutes. It's just been a tank lower. So the ratio ES to NQ has definitely picked up, which means that if I was to trade 3 ESs versus 1 NQ, that's the ratio I mainly look at here on my ratio charts. Um, you could also look at the 1-to-1, but it's just that normally speaking, I like to look at the 3 to 1s for especially. Here's the 1-to-1, so I'll quickly show you guys the ratio here on that. So basically, that's the orange is the market basically tanked there after 2 p.m. And so NQ to ES has mainly been going lower. So it was a pretty good volatile session today, and it's really at the beginning that NQ was a bit stronger when it came to the ratios. So this does not tell you which direction to pick. It's just telling you which, you know, market is kind of stronger versus the other. So I've been using this to basically, do my spread charts and do, mainly if I get into a trade and it's not, you know, a good area to focus on, I'll try to hedge it with the other one. But mainly when ES is stronger, this is basically telling me that the market's volatility is higher as well. So that's something to always watch out for. I know that NQ has been moving a lot more, but I just find that when NQ gets really volatile, I'm able to trade ES. Although today trading ES was not all that easy. I think most of my gains were mainly on NASDAQ. So I have to kind of review and see what really was the issue there. But then if I look at the bad trade I had today, it was the Nasdaq trade that did not turn out very well. But other than that, I'm pretty happy with the way I've been managing these funded accounts. So I just wanted to have a quick discussion over that. Earn to Trade, Apex, LEELOO are the main prop firms that I generally suggest to traders because I've been getting a couple of questions around that. And if we look at quickly my account with the way I'm trading the prop firms is that I mainly use Apex and I also have the legal one. So I mainly use the Apex, so the Apex website is there. They always give us various promotions when it comes to evaluations and all that. So I know that a lot of traders are really, really very happy with Apex. And the other one that I also have a funded account with is LEELOO. So basically, I think you guys probably know how they function. So um, I will put my links below the video here, and these guys are pretty strong. And then when it comes to earn to trade, I also have um, a link to them. So that's something that I will come up with more news within the next several days because I'm going to be giving out a contest, sorry, where it's going to be one link where you guys are going to have a way to get some free evaluations and all that. I'll let you guys know about that because there's more news to come from that. So that's something I just wanted to put out there. Other than that, today's been really a volatile session due to the news again, and I'm gonna come up. I'll show you guys the videos. I'm gonna attach most of my trading from today. You'll see how it's been pretty wild. Like I gotta say, honestly, ups and downs, but you'll see that it's real and there's a lot of good stuff to learn around there.